the assets and the liabilities can be arranged in a balance sheet in different orders and can be grouped with similar items. So this brings us to the concept of marshalling and grouping of assets and liabilities. So what do we understand by marshalling? Marshalling means arrangement of assets and liabilities in a balance sheet in a particular order. So what are those orders? The arrangement can be done in two different orders, that is in order of permanence and second is in order of liquidity. Now students, order of permanence and order of liquidity. As the name suggests, permanence means in this order the most permanent of the assets, that is the fixed assets, are put up at the top end of the balance sheet and the current assets and the liquid assets are put up at the bottom end of the balance sheet. That means when we arrange the assets, fixed assets are put up first, and as and when we go down, then we reach current assets, and this is increasing order of liquidity. Increasing order of liquidity. That is, the most illiquid asset is put up first and the most liquid one is put at the bottom. In case of liquidity, it is exactly the reverse. That is, the current assets are put up at the top end of the balance sheet and then we go on to fixed assets. You can also apply the same concept for liabilities. That is, it would not be fixed liabilities, but in case of liabilities, non-current liabilities would be put up first. That is, non-current liabilities at the top and then going to current liabilities here, and same in the case of liquidity, we will have current liabilities at the top and non-current liabilities at the bottom. So remember students, in case of permanence, the non-current items or the fixed items are put up at the top and the current items are put up at the bottom, whereas in case of liquidity, it is the reverse. The current items are put at top and the fixed items are put at the bottom. This kind of arrangement is called as marshalling of assets and liabilities. Now let us understand about grouping of assets and liabilities. Grouping of assets and liabilities. Now students, remember, marshalling means presenting in a particular order, but grouping means collecting and presenting similar items under common headings. Let us take an example for this. For example, current assets. Current assets are those assets which will realize their worth within 1 year. So assets like cash, bank, debtors, bills receivable, they are all current assets. So they would be put under the heading of current assets. Similarly, we will have current liabilities, in which all the short-term liabilities would be shown. Then we can have fixed assets and non-current liabilities. So these are various headings under which respective assets would be grouped. So let us understand and draw a balance sheet based on grouping and the concept of marshalling. Now students, the format of the balance sheet will remain same. It would be like balance sheet of the name of the business as on the date. Then we will have assets and liabilities. These are assets here, amount. Here are liabilities, amount. Now students, let us say first in order of permanence. Permanence means fixed assets at the top. So here we will write fixed assets. This is one group and will include assets like goodwill, land, building, machinery. There can be many more, but we are taking just 4. Remember, these 4 are also in order of permanence. This is the most permanent. Then as when we go down, the order of permanence decreases or liquidity increases. Then we can have another group like current assets. It will include stock, debtors, bank, and then lastly the most liquid one, that is cash. So remember, since it is permanence, the fixed are at the top, the current are at the bottom, and even in between these the order of liquidity is increasing as when we grow from top to bottom. On the liability side, we will have non-current liabilities. Which will include capital minus drawings plus profit, then any long-term loan and so on. Then we will have current liabilities, which will include creditors, bills payable, bank overdraft, etc. So now students, again on the liability side we have grouped under non-current and current, and it is the order of permanence, that is the fixed ones at the top and the current ones at the bottom. Now in case of liquidity, what we will do is just reverse the order, that is current assets at the top and the fixed assets at the bottom, current liabilities at the top and non-current liabilities at the bottom. That would be the order of liquidity.